Visionary, I think that's a strong word. I would say a very lucky young man. And I say that because I got into the business literally by accident. I was in an automobile accident. I wound up in a hospital for 3 months in a body cast. I had spinal fusion. That was in 1967. That was really, really, thank God, I made it through all of that. And it was my father's very good friend, Bill Downey, who got me into Wall Street because I enjoyed reading the Wall Street Journal that he threw in bed every time he came and visited, and I didn't know anything about finance. Bill tried very hard to get me a job, but I couldn't because I didn't have an MBA. Then I saw an ad in the paper, said junior analyst wanted, no experience necessary. So I was on crutches, I ran over, I said, that's my job. I mean, no experience, that's great. And the fellow was so afraid who was interviewing me that I was going to hit him over the head with the crutch. I said, I wash windows, do floors, I'll do anything for this job. And he said, okay, read this book. He gave me a book. He said, read this book over the weekend and come in Monday, you have your job. And that book changed my life. The book was Technical Analysis of the Stock Market by Edwards and McGee, which is the Bible in the subject. I love the book, and I've been reading and looking at charts for the last 56 years every day. That's my story. That's how I got started. When I started, technical analysis was not an accepted subject in Wall Street. In fact, we were called chartists. I mean, that was like an insult because people said, oh, you're just spending all your time wasted looking at charts every day. And as I said, when I got started with that job, I was plotting charts by hand every day. That was my job. No computers in those days. You were looking at the computer. And I had to get my point and figure price reversals at a company called Morgan, Rogers and Roberts, which was not too far from the office every morning at 8 o'clock, 8:30. I was standing online getting the price reversals from the previous trading day. And it was there that I met a young analyst by the name of Johnny Brooks. He was doing the same job at another firm called Eastman Dillon. And we became friends. And both of us were junior members of an association called the New York Society of Security Analysts. That's all the analysts in Wall Street. That was a very important organization. But we were young kids, so we were junior analysts. And they had us off in the corner because, we were chartists. And they didn't, these were all fundamental analysts and economists and you know, all the important people in Wall Street were part of this organization. But we were so low on the totem pole, we didn't even count. And what really kind of upset Johnny and I was not the fact that we were treated like second-class citizens, although we were upset about that. Johnny was kind of a feisty Irishman. And, but what we were jealous of the fundamental analysts because they would have breakout groups, like the chemical groups would meet once a month, or the drug groups, or the auto groups. And Johnny and I one day said, gee, why don't technical analysts meet once a month? That was the beginning of our search to create an organization where like-minded members could discuss their philosophies and their approaches to investing. That was the beginning of the Market Technicians Association. I'm very, very proud of that. In the early days of the organization, Mr. Ward was about 78 or 80 years old, and that was very important talking to him. He was a senior member, and boy, he was so kind to us young kids, and he talked about different things. And I remember asking him a question. It's Mr. Ward. Now you remember, this is 1970, 71 when I met him, and he's close to 80 years old, so that meant he lived through a lot of bull and bear markets. And I said to him, Mr. Ward, what was the most difficult market you ever had to experience or write about? I said, oh, forgive me, Mr. Ward, it's got to be the crash of 1929. And with a grovelly voice, the man says to me, no, Ralph, that wasn't the toughest market. I said, excuse me? He said, no, the toughest market was the early 60s. I said, but Mr. Ward, it went up. He said, yeah, and no one believed it. I'll never forget that, because in 1995, many years later, I was confronted with that. I was looking at a market that I felt was very strong and no one believed it. So I went back and read every Wall Street Journal every day from 1960 to 1966, and that was the thesis of my Dow 7000 report, which came out when the Dow was roughly 3,800. I'm saying it's going to 7,000. Everybody thought I was out of my mind. And you know what we had in common with the early 60s? Low inflation, low interest rates. Psychology is so very important, especially when it comes to the individual like myself or yourself, anyone that wants to participate. Remember, we're all emotional individuals. And when it comes to money, we're even more emotional. You know, we don't like to lose it. We like to make a lot of it. And you know, and I know that that doesn't happen all the time. Hopefully it happens more times you're profitable than you're losing money. But psychology, I think it's best described as behavioral finance. You know, it's how people react. Bob Prechter and Marty Zweig. And it was September, just before the crash. And to their credit, Prechter and Zweig were calling for a crash. They used the word crash in that article. And I said, oh, well, minor decline. I look back and I said, oh my heavens, we got that decline. I think that was a 35% decline in the market. So I like to set the record straight. So I've had some good calls and bad calls. I advise a family fund in Europe through my cousin. And I'm helping a young fellow. His dad, I know for many years, wanted me to help him out so he can get involved in helping run the family funds. And that's been exciting because he's a very nice young guy. And so I'm still very active, and thank God. I wake up in the morning and I do a lot of exercise, a lot of work. My lovely wife, Rosemary, has 2 horses, and I take care of the horses. And so I get up early in the morning. I look at the market, you know. I email back and forth to the people that I'm responsible to. And that goes on for, I don't know, 3-4 hours. And around noontime, I go out and take care of the physical work and come back and catch the closing of the market. And that's my day. And I'm as happy as can be. Well, it's August 1998. Remember I said before I wrote the report in 1995, Dow 7000. Well, I was wrong. It didn't take 3 years. It only took 2 years to get to 7,000. So in 1997, I raised my target. I wrote another major report, Dow 10,000. And I said it would get there in a few years. On the way up from 7,000 to 10,000. I went on a camera safari in Africa. By the way, you got to do that. That's a very exciting trip. When I came back, the market was down 500 points, and I missed the bull. And the whole street saying, "Oh, this guy says it's going to 7, it's going 10,000," and I was like shocked. I couldn't believe that down. The market was down so sharply. And when I started looking at the Dow stocks, they were taking the big name Dow stocks and shooting them. They were taking them down 10%, 15% in a shot. I said, I called it big game hunting because I had just come back from Africa. And I said, I get on television. No, Ron and Son on CNBC says, Ralphie, you just came back from vacation. You got to talk to us. And I get on television, and I said, well, the market's like this. I said, the Dow's down, but breath isn't so bad yet. I mean, the number of stocks are. I said, as long as it stays like this, I think we could live with this correction. Well, the next day, the market came down even further. And I went out on to my retail. I went out onto the conference call. We have conference calls. That was with Prudential Securities at the time. And on the 7:30 for conference call, I get out. I said, ladies and gentlemen, I'm negative. I think we're going to drop 20% because of this. Now the breadth of the market is following these big game stocks. And Ron Asana calls me up immediately and says, hey, Ralph, yesterday you said everything wasn't okay, and now you're saying it's going to get down 20%. I said, oh, my God. And I get on television because he insisted I get back on television. I said, listen, and the market drops because I was on television. Oh, everybody said, oh, my God, the big bull is bearish. And that was horrible. I mean, I got crucified by the press, and everybody was just saying, well, I won't mention names of my competitors were saying, oh, he's too emotional and blah, blah, blah. And sure enough, the next day the market rallies because it was so oversold. It rallies, and I'm looking like a real... young man asked me that same question a few months ago. I said to him, number one, if you're really interested in coming to Wall Street or into finance, number one, take a class, major in finance when you're in college, minor in economics, get an MBA. When you're in the industry, go for a CFA. And definitely get involved with the CMT program so you can connect yourself with like-minded people and go for the CMT exam. So those are the 5 things that I told this individual who I believe is going to take my advice and when he goes to university. I formally retired from Wall Street. My retirement lasted 2 weeks. The New York Institute of Finance, the school that I used to teach at, every Monday night said, no, they wanted me full time. So I was teaching during the day, and they had me go to China, and I went all around for the school full time, which was cool. When I was sitting down, there was a young fellow by the name of Andrew Root, who was writing a resume of me so he could participate. He was working for the school, and he was part of the creating a resume so they could describe who I was to all these different avenues and venues that they wanted to push me on. This is the school, New York Institute. So I sat down with Andrew, a nice young fellow, and he said, well, what did you do with technical analysis? I said, well, I helped start the Market Technicians Association, the MTA. I started in 1970. In 1975, I started the first library of technical analysis at the New York Institute of Finance. And in 1985, we helped create and write the first exam for the CMT. And in 2007, we fought the Sarbanes-Oxley law. We got it accredited. And he said, "Oh my gosh, you did all those things? You got to be famous." And I said, "No." He said, "Oh yeah." And then I didn't realize he calls me the Godfather of Technical Analysis because all these things I did for the subject. You taught everybody. You taught the street for 40 years, and you know, and that's how it happened. I've been lucky very, very lucky to have had wonderful mentors over the years. And I, in turn, have turned that around. And I think I hope I've been a great mentor to a lot of young people. In fact, what I'm really most proud about is I started teaching technical analysis at the New York Institute of Finance in 1970. I taught all the way up until the year 2010. So that's 40 years of teaching. That was the school of Wall Street. All the traders on the floor, all the portfolio managers that took over the years, there was no other place to learn technical analysis. So I am very proud of that. I think I taught the world technical analysis.